So that was the trade of the day. We also got pretty lucky, I would say, with the NAS. Don't really like trading. Well, turned out all right. It was just a very painfully slow, dithy dathery move to the downside. Managed to get out the low of the day. Happy about that. Into the point of control for the day. Those high volumes that were transacted in Asia and London gave it a pretty good target to go for. If there was more time on the day, it probably would have come into the closing price, but this is effectively the close of Wall Street. Um, Gold. Right. So we talked about gold. We talked about it being offered below the closing price. We talked about being short. We want to stay short of gold while below Friday's close. It was a very back and forth day, not ideal to be trading. Um, and that's all I've got to say really about it. Um, we came up one, two, three levels, and we just drifted back into those longs right from the closing price as a resistance area. Um, and the New York Open, no, sorry, the Wall Street Open, getting in on the break of the New York low so far on the day, getting in here somewhere for a short. Okay, so there we are. Now you probably want an outlook for gold. Um, if we come out to the daily chart, then it's been on a nice bull run of late, um, partly due to the US dollar trying to move lower, but still not really having much of an impact on the bulls at the moment. But the more it digs in at them, the more likely they're going to start caving, throwing in the towel, and giving way to a sell off. But the dollar is obviously going to be propped up on safe haven flows. So I'd be cautious chasing um, the dollar lower. The gold price um, is consequently moving higher on safe haven demand and a touch of weakness in the dollar. So we're up into resistance as per these highs. And we'll have to let the week play out and determine where it's going to go from here. But we've had the first day um, dropping below Friday's low, coming back up. But let's see what this looks like on the 3-day cycle. So we've got Friday's closing price. So this will likely end below the closing price and give us a first red day for the week. So in that respect, we can be looking to sell high on Tuesday in anticipation of a downside continuation and a correction from those highs. Right, so I haven't got a crystal ball, but that's my best guess at the moment. And we'll have to see how Asia and London set us up for the US session. Those that are trading Asia, then we can come back to this template. And if it looks very messy, I apologize. It's all very essential stuff for me on the chart. These levels I've added because I want to be getting in at levels and on time rotations, depending on the behavior of price throughout my session. But we can get rid of that for the time being, I guess. I'm not using it. Clear it up a bit. So for the day ahead, what I would suggest is keeping an eye on today's closing price, whatever it will be, and looking to fade any rallies above the closing price that look to be decelerating and don't come with much conviction, especially in and around Friday's closing price, because that is our closing range for last week. So that closing price, 1980. If you're seeing the price fail in here, then I'd be looking to find opportunities to get short based on the market structure. All right, because we're technically in a bearish environment, right? Because we broke this trend line, okay, with that move, that dump on in Asia on Monday. We broke the lows, so that leaves us in a bearish environment. Okay, so that's my outlook for gold for the time being. I'm bearish on gold below 1980. What else? What does fade mean? Fade means so when you've got a rally, when you've got the market that's rallying, when the price is moving up, especially when it's moving parabolic and steep. If I can find a, get with me, this. So when the price rallies, fading is when you short it. Fading rallies. So pump up, fade it, sell the rallies, fading the market. Okay, and yeah, so that's what fading means. What else should we look at? New Zealand Kiwi. Right, New Zealand Kiwi off the bat is a risk on, risk off currency. So it tracks the stock market. So when you've got US stocks rallying or global stocks rallying, you'll see New Zealand and yen rally as well. New Zealand with the high interest rate, so it's a carry currency. So when so it's a carry currency, and also the yen, you put your money into the yen as a safe haven. So if the stocks are rallying, you're likely to see the yen sold off, and currencies like commodity currencies, the yen and New Zealand and the Aussie will trade as a proxy to the price movement in the stocks. So I hope that makes sense. Just to illustrate that, we can add, if I can remember how to do it, add the S&P. So there you go. So as you can see here in New York today, Wall Street, it rallied in line with, exactly in tune with the S&P. All right, so if you see stocks going up, look to what Aussie yen and New Zealand yen are doing, and you can trade in the same direction as what stocks are doing. Now, in terms of what, let's see if I can get rid of this now. How do I get rid of this? Because it's messing up my ability to analyze the chart. No. Anyone know how to do it? I can't remember. Maybe if I do this. There you go. Right. No, still doesn't work. Yeah, there we go. So the Kiwi rallied up into yesterday's highs. We've had a sell-off from the highs, to be expected, really. And it's stacking up on top of London's highs. So perhaps we'll get a bit of stability at this point. So we've come down into London's highs. We are technically, we've hit pretty much, okay, we've done stops below the lows. We've come up, I think we might be coming up for stops above Friday's highs over here. So perhaps we are pumping up to stay up. So could be the scenario, especially if we see a recovery in the stock market. So as you can see, we've had that sell-off in the S&P, so perhaps we're going to start pumping up for an upside continuation, which would help both Kiwi and the Aussie. So let's move over to Sterling Oz. Higher, similar scenario, guys. Sterling is also a risk-on currency. Right. Coming out to the daily chart. So, Sterling Oz, we're in that sort of support bracket. Yeah, I'd say that we're supported at the moment. We're in support. A retest of the breakout area looks like to be on the cards. So 94, 94, let's push it up to 94, 94.70, I would say. 94.70-ish as a target on the upside. All right, we're breaking this level here. Could be a fast pop-up to retest that breakout area. Okay, so guys, it's a relatively short one tonight. Any other pairs you want me to look at specifically for the day ahead? If not, we'll have a rest at my end and get ready for the US session on Tuesday. Keep in mind, guys, plenty of red data on the calendar. Might be consolidative up into that data. We'll have to see. All right, guys, so we'll leave it there. I wish you all a very good day ahead and a good evening wherever you are in the world. Thanks for joining. Good to be back. Thank you for coming and see you later.